Hello and welcome. You're watching Property Hotline with me, Suesha Sawant. Today we'll be answering questions about buying and selling property with none other than Amit Goenka, MD and CEO Nisus Finance, who joins us in the studio. Amit, thank you so much for joining us.
Thank you very much, Suesha. Thank you very much.
With that, let's move to our next question. Amit, a question comes to us from Amitabh Singhal. He sends us his question via email saying that his family owns a 15,000 square meters of ancestral industrial land near Loha Mandi, GT Road in Ghaziabad. Now, he wants to know what would be the current rate of the land in per square meter or square foot.
Absolutely. Ghaziabad obviously has gained a lot of prominence for it being part of the NCR capital region. It's one of those areas, part of the larger northern region, which is part of NCR and has been seen as an affordable destination compared to Gurgaon or Delhi. For a very long period of time, we've seen some extraordinary developments and townships come up in Ghaziabad. So clearly it has seen a very huge amount of demand and largely end consumer demand where townships have come up. The connectivity has been great. It is largely an industrial corridor because of which largely people who are working in the vicinity of Noida, Ghaziabad tend to actually take up residence in Ghaziabad amongst other locations, especially given the quality of development that has come up in integrated townships out there. Even preferring it sometimes over Indirapuram, given that it has a better property price point compared to Indirapuram, which is in the vicinity. A lot of people have also preferred Greater Noida West or Noida Extension, as it was called, again, which is in the proximity of that region. But Ghaziabad still maintains its lead in terms of a favored investment destination. So clearly a land parcel there is reasonably valuable, and because it's on GT Road, which is again one of the most popular roads, which leads up, goes right across UP and gets even into Punjab. So I think given the location, and of course we don't know exactly where it is located and whether it is abutting the highway or it's one of the interior roads within the highway, but the estimates typically tend to be within 60,000 rupees a square meter for property out there, because it's almost about 15,000 square meters. Typically, we're looking at almost 25, which is about 3.75 acres, more or less. One is looking at almost a 25 to 30 crore per acre sort of a price point. That gives the value at close to about 90 odd crores to maybe even up to 120 crores, depending on the location, depending on the title, the zoning, etc. Because if it's a residential zone, then it commands a better property pricing as compared to if it's an industrial demarcated property or agricultural demarcated property. But that would typically be the range because of the location, because of the micro market. So one can expect something within that vicinity. And of course, I think the other thing to consider is that the pricing now seems to have also peaked out, because there has been a flattish to a downward trend in terms of the pricing of user apartments in Ghaziabad, which are in the 4,000 to 5,000 rupees a square foot range. So given that, I think if you are able to realize this value, it may be a good option to actually capitalize on this investment.
So at this point, for somebody who has that kind of land in an area like Ghaziabad, you would recommend one holding that, or probably?
Yeah, as I was mentioning today, land pricing is not necessarily seeing an upward trend. And again, given that the Delhi master plan has generally been approved, and once the implementation of that master plan happens, there will be new stock coming up and at cheaper prices in East Delhi as well as in Noida Extension. So I don't see any sort of great upside happening on the land or the end consumer stock any time in the next 3 to 5 years. So given that, I would recommend that if you can realize a sale value of the range in which we have provided, you might be far better off actually capitalizing on that asset today and investing into an alternate investment which is appreciation based in another micro market rather than staying on this property. Having said that, it's hard to transact such large value lands given the liquidity scenario. Right. So you might have to consider other alternatives, including doing joint ventures or maybe selling plots and things like that.
All right, Amitabh, I hope that answers your question and gives you a fair idea about what you can do with this piece of land. With that, we move to our next question, and I'm being told that Karan Virmani joins us on the phone line. Hi, Karan, welcome to the show. What's your question?
Hello. So that's it. My question is it worth to invest in Noida just because the property prices are decreasing day by day over there? And so for property point of view, does it make sense? should I invest there? And if no, so is it better to invest in Pune?
So he's typically asking you for a comparison between Noida versus Pune, whether he should invest in Noida or he should invest in Pune. What's your budget approximately?
It's around 40 to 45 lakhs.
40 to 45 lakh rupees. So what do you recommend?
And Karan, the other question is, where are you located? Are you located in and around the NCR region, or are you
Actually,
Mumbai?
I'm located in Mumbai, so
I see.
So you're purely looking at it from an investment point of view.
exactly.
All right.
Right. So, Karan, I think one of the basic tenets of investing is its ability to access your investment, visit it regularly, and obviously try and capitalize on the investment as and when it is possible, either through rental, leasing, resale, etc. So, if you do have an access to Delhi, or you travel there frequently, or have a base there, then it might make sense for you to also consider NCR. Otherwise, notwithstanding other economics, you might be better off looking at Mumbai or Pune. Purely to answer your question, one is that, of course, Noida, compared to the last 3 years of its performance, which has been slow to bleak, has actually suddenly jumped up in its prospects within the last 6 to 9 months. In fact, the numbers indicate that the pre-Diwali sales this year have been 15% higher than what was witnessed in the last Diwali season, clearly indicating that the confidence index in Noida has actually gone up compared to what it has been in the last 2 to 3 years. Second is that today possession is being offered because the authority has started giving occupation certificates, and ready to move in inventory is now available in Noida as opposed to only under development projects, which is obviously espoused the confidence of the market. And third is that it is still a very end consumer and affordable market in the larger NCR region compared to Gurgaon or Delhi, and therefore end consumers tend to still flock to Noida given its infrastructure and price points, and therefore continues to be a great investment opportunity compared to other markets. I think if you have to look at Noida, given your budget, one would look at typically 1,000 square feet, because most properties tend to have an average of 1,000 to 1,200 square feet of saleable area. So for a 40 to 50 lakh budget, you're looking at a price point of close to about 4,000 odd rupees. That is something that you'll effectively get within the Greater Noida extension, Noida extension, Greater Noida West sort of a region. And there are some extensive developments which have happened on that belt, obviously. So there's Gaur City there, which is selling at about 4,000, which is ready to move in. There's Supertech Eco Village, there is Stellar Javelin. So there are a number of projects which are ready to move in, have a price point of anywhere between 3,600 rupees to 4,200 rupees a square foot, which would clearly, a 2 BHK would fit into your budget. Given that it's ready to move in, obviously one can rent it out there, because the expressway is ready, the connectivity is good, and people have already started to move into that micro market. And again, the upside looks reasonable, because if the price point is, and in fact there are other projects also which are available at even slightly lesser, but they will take about 6 months to 1 year to construct. So if you actually look at staggering your investment through a loan, then you could even look at an under development project which will be developed exactly in that vicinity in another 6 to 12 months, but will cost you about 3,400 to 3,500 rupees a square foot, where clearly the price appreciation post possession will be another 700-800 rupees. So you might actually get a reasonably quick upside if you do look at an under construction property which is at very late stage, nearing completion and possession. So I would recommend you continue look at Noida as an option if you have a base there, and that remains my first recommendation, that you need to have access to that market. Otherwise, then look at Pune, but finding a property in your budget will be hard. You will have to look at the industrial belts of then Pimpri, Chinchwad, into phase 3 of Hinjewadi, into some of the other industrial and the LIG sort of locations where the appreciation looks challenging.
All right. So basically, you're saying that Noida is an option he should
Absolutely.
consider over Pune.
Yes.
But considering he lives in Bombay, he should still go in for Noida based on his budget.
That's one, and of course he should have an access to that market. Either he needs to have a base there, he needs to have people who can manage that for him, or he travels there very frequently. Otherwise, then it doesn't make sense. Notwithstanding that, one would then still look at Pune and or Navi Mumbai, or even a Neral, Karjat sort of a location where you can get these price points, where you have still ability to access it, monitor it, deploy it, etc. That is a very important part of investment.
Of course. And thank you so much, Karan, for joining us. With that, we move to our next question, which comes in from Manoj Bhardav. He joins us on the phone line from Jaipur. Yes, Manoj, tell us your question.
Hello, ma'am. I'm from Jaipur.
Yes.
I stay in Jaipur. I stay in C scheme Jaipur. I have a residential property here. which
Okay.
I intend to develop.
Okay.
Develop and construct flats in that.
All right.
Now I have to obviously move out from this property, and I was looking for a suitable location where I can build a house for my personal living. Now the point, I although I am from Jaipur, but I still need advice from Mr. Karthik whether he can suggest some good localities with proper amenities and quality of life being good. If he can guide me in that regard.
Manoj, what is the kind of budget you're looking at?
Ma'am, I want to buy a land measuring between 600 to 800
All right.
yards.
All right.
And my budget is around anything between 3 to 5 crores.
3 to 5 crores. So, Amit, what do you
Yeah.
have to say?
So first of all, thank you for that information. Extremely exciting market Jaipur was till a few years back. As you know, you're from Jaipur, so you understand the local dynamics. The land prices have actually jumped up very quickly. We don't know if there will be further upside on the land. There, as you are aware, there has been a large integrated township development, not just one, but several large integrated township developments, including the Mahindra SEZ, which have delivered affordable homes. But the offtake has been not that exciting. And price points have more or less flattened out because Jaipur is seen now as an extension of Delhi, more as a second destination, a wedding destination, an industrial destination, maybe to some extent even a tourism destination. But it is not growing in terms of primary demand for housing as such. So in terms of reinvesting in Jaipur, if you have options that you can think of within the price point, I will not be able to suggest you anything within Jaipur right away because our view is that the market will continue to be flat to downward for quite some time unless the DMIC comes in, and that the DMIC coming in will then be the next sort of inflection point, which will then raise the prospects of the entire corridor from Delhi, including Rajasthan, Gujarat, Mumbai, Maharashtra, etc., which is again obviously some time away. So my recommendation is that if you have to buy land, then you're better suited to actually scout the opportunity, sit on the land for the next 5 to 10 years and see how it appreciates once the DMIC comes in. If you're looking for something which is more short term, which is more quick in terms of turnaround and sale, because clearly that ticket size is not something that you can transact very quickly as well, then you might be better off actually looking at apartments within the NCR region itself, because again that's accessible from Jaipur. So whether you're looking at Ghaziabad or Noida extension, I think those are locations which you can also consider. And again, there are land plots available in Gurgaon as well as in Noida, which will tend to continue to have an end consumer demand because they are very heavy IT corridors, they are very heavy corporate corridors, and obviously the gateway to the entire NCR region, and that will obviously tend to have a faster turnaround in terms of liquidity and appreciation. So my recommendation is that in terms of Jaipur, I have limited opportunities available to recommend to you right away, but outside of that, if you have to diversify yourself, do look at options of buying land parcels or apartments in Gurgaon, either at Sector 89 or thereabouts, or even looking at Noida extension, where again you'll find plots as well as apartments which are well within your budget.
So, Amit, in case you're asking him to wait it out in Jaipur for now, and he's already a resident of Jaipur,
Yes.
For how long would you tell him to wait it out and for now invest in other markets like the NCR?
Right. So as I said, there has to be a driver for growth or for appreciation. And Jaipur, I think the next driver would either be a huge hospitality play, because a lot of people have started looking at constructing new hotels or new sort of properties for the tourism or for the wedding destination sort of consumers, or it has to be the DMIC. Now, both these opportunities are at least 3 to 5 years away. So effectively waiting on that means then you're effectively baking your investment for 5 years and hoping for one of these things to actually happen, as opposed to working with the current drivers in the NCR region, which tend to be IT, corporates, as well as other commercial developments and opportunities which have a faster churn and turnaround.
And of course, he's very clear that he's looking at it from a residential point of view. So ideally, you suggest that 3 to 5 years is a period he should wait it out as far as Jaipur is concerned.
That's right.
Amit, with that, we'll move to our next query, which comes in via email from Noman Sheikh. Now, he says that he's planning to invest in a project started by Serbia developers, and the name of the project is Serbia Neral Varai. Now, Noman says that the developer is providing him an easy finance scheme. He wants to know the overall details of the project. He also wants to know the appreciation he could expect in the project and the future potential that this location has.
Absolutely, Noman. I think a very interesting question and something which a lot of people have started to keenly look at is the entire Karjat, Neral, Mathiran market, because a lot of large-scale townships have come up, and Exerbia is one of the sort of developers who've taken up very large land parcels to develop an intensive amount of townships in that location. So obviously that location has been known more as a pristine, as a second home, as a tourism destination because of its proximity to Mathiran, being at a slight height, has better sort of weather compared to Mumbai. So people just tend to leave and spend time in Karjat. It's more known for farmhouses rather than
That's right.
apartments.
Yeah.
But now, given the affordability and price point, and obviously the central line connectivity improving, there's a new proposed new Panvel-Neral highway, which will obviously make the commute faster. It has better connectivity with not just the central line, but also with Navi Mumbai. They were giving you the edge of Navi Mumbai as well. So given that it is now working towards a better connectivity, it will still be seen as an alternate affordable housing destination. The current price point, I understand, of this project is sub 3,000, so anywhere between 2,800 to 3,000 rupees a square foot. It is expected that the project will be delivered in about 2.5 years. But I mean, my own view personally is that given that it's a new micro market, it's not an established micro market. People are developing it for the future, and therefore there needs to be activity, commercial activity to absorb that inventory. There needs to be industrialization. There needs to be people working in the vicinity. And once it starts establishing itself like the next Dombivli or Kalyan or Badlapur, where industrialization moves in, it starts becoming more active. That's when it'll start seeing actually better occupancy and better appreciation. I think that's the first part. The second obviously remains the connectivity. It still takes time from Bombay to actually reach Neral. And while of course it is expected that in the next couple of years the connectivity will be far better, we don't know that for sure today. So it is more of a punt on a new micro market, which if it develops well, then the upside can be reasonably high. One can expect the price to actually, because you're going to pay obviously over a period of time, then your investment can actually appreciate from the current 2,500-3,000 rupees to almost 4,500-5,000 rupees without a doubt over the next 2 to 3 years. But to that extent, it is still a punt because there is no precedence, there's no history to that location. So I would say that if you are willing to bet your money on that potential development, then you should look at it. If you're more conservative, you're not a regular property investor, it is one of those investments that you have to make and park in property. Look at more established locations, ready to move in properties, which are also starting to get abundantly available, especially within Kalyan, in Badlapur, in many of these locations, which are slightly higher, maybe at 4,500 to 5,000 rupee price points, which again you will get better subvention schemes and payment terms as well, given that people are offering it. But that may be a better bet because they're established locations.
All right, Noman, I hope that answers your question. If you're willing to take that risk, then probably you can look into this project. Otherwise, you have better options where they're more established, and probably at this point in time, you can look at those as well. With that, we move to our next question. We have a caller, Praveen Shukla, who joins us from Mumbai. Yes, Praveen, tell us your question.
Hello. Good evening, ma'am. Swesha and
Good evening.
Good evening.
Yes.
This is regarding a pure investment point of view. I have identified a property in Mira Road,
All right.
Thane,
Yeah.
purely from the perspective of investment.
Okay.
This is a builder called Sadhguru Brothers,
All right.
and the property is Lakshmi Heaven, Sadhguru Lakshmi Heaven. I am told that the OC is still not in place, but the property is ready to move in.
Okay.
Okay. Now, I just want to know what are the risks in terms of regulatory approvals with regards to this property.
Okay.
Besides that, the various flats in this property are being funded through various banks through home loans. And also, I am getting this flat with a tag of investor's flat.
You're getting this flat?
This flat is tagged with investor's flat.
All right.
I've been told, and I'm getting this flat with a discount of reasonably somewhere around 10% to what is prevailing in the market presently. This is through some known connections. Now, I want to know what are the risk associated with this property, why I'm getting this low price.
All right, Praveen.
One.
Yes. So Amit, he's getting a good discount, which is obviously tempting him to go in for this project. But also the OC is awaited. He wants to understand, how would you rate this project? How does it fare according to you?
Absolutely. Excellent question as well, because I think understanding the basic tenets of a property like he's getting into is very important. One is that the micro market, I really like Mira Road, Bhayandar as a micro market, because I think it provides better affordability compared to Borivali or Kandivali, which are next door. It is almost at about 30 to 40% discount, whereas hardly it's about 15-20 minutes away from any of these micro markets. So I think that's great. Second is that obviously it has an established socio-economic infrastructure, whether it's entertainment, shopping, commercial, etc., which is again a very positive point. And again, it's a very old micro market. So and it has obviously evolved itself as a better location for even mid-income to high-income families as opposed to low-income families. And it is expected also that the toll may actually move beyond Mira Bhayandar. So all these work very favorably in favor of that location. From a price point perspective, usually asset tends to trade between 6,500 to about 8,500 rupees a square foot there typically on a saleable basis. What has happened typically in most of these micro markets which got developed very fast is that a lot of stock got sold to investors who now, given the current sentiments and given the liquidity scenario, have started to offload inventory at a discount to the primary market. So while Mumbai is still not plagued as heavily as NCR, where you can easily get from the secondary market a 10, 20, 30% discount from the developers or the primary market pricing, Mumbai has seen little of it, but it is real and it is there definitely in some of the outskirt locations like Mira Bhayandar, where investors tend to offload at a slight discount to the developer, thereby wanting an exit. So one needs to obviously be very clear in terms of the terms of such sale, if it's being bought from the secondary market. A, whether it's a registered agreement. B, does it have all the clauses that are required to resell it without incurring any transfer charges, resale charges, any other possession charges, etc., which tend to happen in an investor sale. And therefore clarify the terms and make the developer party to the resale as a confirming party. So that way, as a confirming party, you're very sure that all parties have accepted the sale. It's not only a secondary sale to you. As far as occupation certificate is concerned, it is mandatory. Now, as per, even though the new MOFA Act is yet to be notified, it requires that possession can only and legally be handed over once you have occupation certificate. So people call what is soft possession, where if you need to do fit outs, then they will let you enter the apartments and they will let you do fit out or interior works, but that is not possession. Possession and can only mean post occupation certificate. So it's extremely important to understand the time frame for obtaining the occupation certificate, and B, what is written in the contract. And if it is silent in terms of occupation certificate, one must in the resale agreement have a firm date put in for the occupation certificate to be available. If there seems to be a challenge, and that is something we can't advise you on this show, but you must seek legal opinion in terms of whether the occupation certificate will be availed in a short period of time or not. So that is the due diligence and legal work that you need to undertake. But clearly from an investor's perspective, buying an investor's apartment is a good idea because you're benefiting from the lack of liquidity scenario in this market. We like that a lot. We do that a lot as well, because one is able to use liquidity to be able to get good returns and good discounts in today's market scenario. But obviously you need to exert caution.
All right, I hope that gives you a fair idea. It's a great market to invest in, but of course there are necessary prerequisites that you need to be extremely careful about, and for that you should take legal consultation, who will, of course, your lawyer can help you out to understand if all the things are in place. With that, we move to our next question, which comes in from Ravindra Singh. He joins us on the phone line from Bengaluru. Yes, Ravindra, tell us your question.
Ma'am, I've got a one-bedroom apartment in Hardwar.
All right.
The builder's name is Arogyam. Arogyam is a project thing. It's given by some reputed builder. I don't have his name at the moment.
All right.
Arugam is very well. It's very close to Patanjali, 1 kilometer. Patanjali, Mr. Ramdev.
So, Mr.
So I
Singh, what's your
surrendered the-
question?
I surrendered the flat to the builder,
All right.
and I'm very keen to sell it. 1 bedroom thing, 850 square feet. So I would like to know what should be the right price for that.
All right, Amit, we are completely running out of time on the show, so we'll quickly answer this question. He wants to sell this property that he has in Haridwar. What would you advise him?
Well, I mean, if he's keen to sell, there's no problem. Clearly, I think Haridwar has emerged as a holistic destination, as a great tourism destination. And he mentioned Patanjali. Everybody knows the ripples that Patanjali Ayogipit is creating around the country. But having said that, in terms of property, one clearly understands that if there is a buyer available for it, because again it's a tourism destination and now obviously turning into a very large industrial and manufacturing zone as well, one should expect close to about 35 odd lakhs for that apartment, anywhere between 32 to 35 lakhs. So if you're getting that value, you should be good to get it and exit.
So, Mr. Singh, 35 odd lakhs is a good amount that you can look at in case you're looking at selling this property. Thank you so much, Amit, for joining us.
Absolutely, pleasure. Thank you, sir.
With that, like I said, we're completely running out of time. Thank you so much for joining us on Property Hotline.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.